Here on the Market Day Report, Oliver Sloup of Blue Line Futures always does a great job of explaining some of these technical moves, and he's here with us now. So, Oliver, let's get into a little bit of technical chart action here. I want to share a chart with you, and I want to describe this for our radio audience. It's a chart that shows July 21 corn prices and December 21 corn prices and the spread that we had back here, in late April, early part of May, and how we're starting to narrow that a little bit. I want to start here before we get to the soybeans first, because if you go back to about the end of April and take it all the way back to the beginning of April, we were walking pretty much in lockstep, but things kind of got wild here lately. What's that from, number one? And number two, what does it tell us?
Well, absolutely. July, outside of today, for the last couple months, it seems, has been far outpacing the new crop contract. And what that says to traders and other market participants is that there's a bit of a supply crunch, which has been kind of the backbone and the foundation of the rally that we've seen in the grain market. And we've really seen that accelerate here over the last month. Looking back to April 6th, just a month ago, we were about $1.85 lower. So seeing this price accelerate at the rate it has indicates that there is concerns over supply. We should get some numbers from the USDA next week, maybe kind of put a little bit of that to rest. I think wouldn't be surprised to see the market maybe calm down a little bit after this run that we've had. And as we see parabolic price action to the upside, there's bound to be some pretty violent reactions and reversions down to the bottom side. So it's going to be really important to manage risk on both sides of the market going forward into that USDA report.
Okay, then now let's take soybeans then. July nearby soybean chart, and you compare that to where we've seen things go with the deferred or that new crop November. Again, that all started to happen about the same time period. And now, if you get really down and dirty with this, you can see where we're almost now starting to catch up with one another.
We're slowly but surely getting there. Big moves here recently, especially today. We've got beans up somewhere between 25 and 30 cents, depending on what contract you're looking at. But the same type of story with corn. There's a lot of concerns over supply, and that's been the catalyst for the better part of the last 2 months. We remain pretty upbeat on that new crop contract and wouldn't be surprised to see that continue to narrow that gap a little bit with the old crop. It's not going to do it overnight, but looking at a little bit longer time frame, I wouldn't be surprised to see that happen. I do think that pullbacks and setbacks are probably welcomed and very healthy at this point, as mentioned with corn. Looking back over the last month for this July bean contract, we've come about $1.70 off the high. So for a sustainable long-term rally, you want to see the market try to catch its breath occasionally, and we haven't gotten that here in a while, so we're hoping we can before the weekend.
That's a good point. July corn up 12.5, 721. December up 21.5. At 626 1/4, just leaves us off the high there by just a little bit. Then over in the soybean market, it's July up 27 3/4, 1570, and November up 33 at 1415 3/4. July Chicago wheat now up 6 1/4 cents. Kansas City July new crop up 7 1/2, and in the Minneapolis wheat market we're up 5 3/4. Where does this leave wheat?
Well, wheat has been all over the place, trading in about a 20-cent range. Corn and beans have been mostly parabolic, but we saw wheat trading in the red earlier today, trying to find its footing here, probably getting a little bit of spillover strength from the corn and bean markets as kind of the money flow just seems pretty optimistic and upbeat across the board. Now we're kind of retesting the top end of the range from the last week or so, and if we're able to get a conviction close out above this 77.50 level, I wouldn't be surprised to see that invite some more momentum traders back into the market, potentially retest those contract highs from 769.5.
All right, and over in the cotton market right now, we've seen quite a rally over here in the nearby, up 280 at 90.13. I tell you what, Oliver, I worked you pretty hard there in the grains. I'll take it a little easier on you in the livestock. That's coming up next here on the Marketing Report.